Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, after yesterday's havoc that played across the global markets, today we are actually seeing a shade of green across the D Street today, be it the benchmarks, the Nifty, the Sensex, frontline indices like the Nifty Bank, broader markets like mid and small caps, all the sectors that are still positive in the green. There is a recovery that's underway. You can see the Nifty back above 22,540 odd levels, up about 380 odd points. A lot of stocks that are buzzing on trade. In fact, there are only a handful of them that are lower on the Nifty. Only one right now. It's only Power Grid that's slightly weak, but 49 stocks up into the green. So that actually helps you understand the broad sentiment on D Street today. Geo Financial Services is 5% higher in trade. That's the top mover, of course, after the company has announced a foray in digital loans. You can also see Shree Rama Finance up and about in trade. Titan Company after the business update. Adani Enterprises, Cipla remain the top movers on the Nifty. While on the downside, you have Power Grid, IndusInd Bank, Trent slightly higher now. HDFC Bank, TCS and Tata Steel as among those that are moving on the positive zone as well. Let's also look at across the sectors. It's the media stocks, consumer durables, PSU banks, real estate sectors that are driving the show today. India VIX is now down by about 9.5%. So more comfortable level to really look at, 20.6 vis-a-vis yesterday. F&O space, you have a lot of those capital goods, capital markets names now buzzing in trade today. BSE is topping the chart, 6% higher for this one. You also have PB Fintech that's buzzing, HPCL from the oil and gas space that's also on a momentum which is upward bound. Let's actually welcome our guest on board to help us understand the sentiment on the D Street and what do we expect from here on. Mr. Abhishek Basumallick joins in. He's the co-founder of Shree Rama Managers PMS. Warm welcome to you, Mr. Basumallick, and thank you so much for joining in. Well, you are joining us on a more saner day than yesterday. So, you are the one who has actually seen the havoc play out and then since returned back to the D Street. You'll be able to tell us better how much importance does one really give to all these tariff tantrum-led, sharp volatility that we are facing in India. Does it really mean that retail investors have to focus on rejigging their portfolios in a post-tariff world, or do you think things can be back on track soon?
First of all, good afternoon to you and all your viewers. See, I think we need to understand the implications based on time horizon. So, how does what is happening all around us affect us in the short term, medium term, long term? Right. So, right now, today we've seen a very good recovery after 2 days of very sharp falls. And in the short term, I think, short to medium term, I would say, I would still want to remain very, very cautious because definitely we are not out of the woods in terms of news flow from the US, right? And what we've seen till now is that the two major players in this tariff tantrum, if we call it that, US and China, none of them are backing down. And right now, I think none of their egos will allow them to back down very easily. So we are now in a situation where we are headed for a trade war, right? So what are the implications, how things will play out over the next 6 months, 1 year, 2 years, is something which we cannot really determine sitting here today. So I think we need to be cautious. We need to keep evaluating how our portfolio companies are going to do, how the economy is going to do over the next, at least for the next month or so.
Absolutely. So, that's as far as how do we really keep an eye out on what's going to happen at this point in time and how should investors be really looking at this scenario. But do you have in your mind already segregated the key more vulnerable sectors, and therefore are you looking at avoiding them completely in the post-tariff world order? Are you looking at favorably some of the sectors? I mean, we did see on the day then the tariffs were announced, textiles rallied in trade in hopes that, we will probably be seen as better off country than the other than the other Asian peers like China, Indonesia and the others that were, put in higher tariffs on vis-a-vis India. Or do you think one has to continue to keep a positive outlook on the long-term portfolio, and any sector can actually come on the radar of Trump anytime. So it's very difficult to keep sectoral watch there. How are you really approaching this?
So first of all, it's not only about what US or what Trump is doing, or not only about what China is doing, because see the global economy is a complex adaptive system. There are too many parts that go around all of us. So it's sometimes very difficult to predict what is going to happen, especially in a time like this when what we are actually seeing has sort of not been seen before in the recent past or anytime soon, right? If you think about it, the way the global supply chains have been structured has been around for the last roughly 30 years. That's when China started, and the movement of manufacturing away from US to China, away of movement of services to India, etc., started early 90s, mid 90s. So, you cannot uh, sort of understand the implications of change on a very short term of something which is trying to sort of do away with 3 decades of something being in place. So uh, I don't unfortunately have a very easy and clear answer to uh, any of these questions as we stand. The only thing that I think as investors we need to do is to be cautious. Coming to the sectors, industries, I think it's a no-brainer to look at India-focused industries, India-focused companies. We do have a very large domestic market. We've got tax cuts that were announced in the budget, and that is going to start, flowing into people's paychecks at the end of this month. We have a pay commission that has been announced, and typically, and it may take some time, but pay commissions again give a fillip to consumption because a large number of central government employees get a significant pay rise. Uh, then we have, you know, uh, a possible rate cut that is going to come in this week from RBI. At least that is what the expectation is. So all in all, I think at the you know purely domestic centric businesses will fare better. How will the stock prices behave? That's something we need to, again, it's not a one-to-one correlation of the companies doing well and stock prices doing well in a short period of time. Over the next 5 years, definitely, I'm confident that we will be, more than double than where we are today. But will that happen over the next 6 months? Will we be higher? I don't know. I cannot, say for sure.
Okay. We can also discuss this other aspect, that is, what happens to asset allocation at large. Because as a reaction to the tariff war, we actually saw all the asset classes synchronized fall that day. Although there is some recovery happening in the gold and silver markets again in trade today, but it was bonds, it was currencies, it was bullion, it was markets, everything falling flat because they did not know how to deal with this uncertainty of trade war. We already know that China is completely going all out in retaliation in whatever way they can. On the other hand, we do know that Vietnam is taking a softer stance. They want to reduce their tariffs so that things can be on a better negotiating table. In this kind of an uncertain environment, how do you expect investors to go with their asset allocation strategy?
See, asset allocation is not something that you do as a knee-jerk reaction to an event, right? It's a strategy based on your life circumstances, your risk tolerance, and things like, and your return expectations. So it's not something that you would, change on the fly because Trump is doing something and somebody else is doing something else. Uh, I personally invest, primarily in equities. So when I say we need to be cautious, either for especially for long-term investors, I think if you have some part of your portfolio in cash, See, the worst thing that is going to happen is if the market has already bottomed out or is bottoming out, that and you are on cash, the worst that is going to happen is you will buy back stocks maybe at a slightly higher price, than now, and that's not the end of the world. uh, so if you have some amount of cash to cushion your portfolio, uh, purely from an equity asset allocation perspective, and have a reasonably diversified portfolio of stocks which are in India focused businesses, I think it should be fine over the medium term.
Okay, fair point. We'll come back to the macro in a bit. Let's focus on some of the stocks that are also buzzing. We are just about 17 minutes off from the day's close. Today, there is a lot of momentum, news-based coverage that's happening. We are seeing how Jio Financial Services is rallying. The trigger is that the company from its subsidiary has rolled out, as far as digital loans are concerned, people can now avail loans of up to 1 crore rupees against their existing investments in shares and mutual funds within just 10 minutes and entirely online. How do you see this disruption really coming in from a large player like Jio?
uh, I mean, I am not honestly very positive on Geo as of now.
Okay.
Whatever we've seen of Geo is mostly promises and announcements uh, of you know their strategy and announcements of things that they will do. We've not seen any concrete results as such, and let them do all this. See, end of the day, lending and financials is a very crowded marketplace. It's a marketplace which is which is where very very strong players are there, and just because you are a Reliance company does not give you a right to win kind of a situation, because you have other very very large well entrenched players who are going to give you extremely hard competition. So it's not going to be a cakewalk because you are Geofinance. So I would wait to see them perform. I would uh, and then take a call. There's no hurry in getting in. I'm not getting Geofinance at a mouth-watering valuation, anyways.
Okay, okay, fair point. So that's as far as geofinance is concerned. Let's discuss Titan. We were discussing gold. A lot of uptick that in the business update has come in has also been due to the rise in gold prices for their jewelry segment. Do you foresee that continuing in the medium to short term for Titan? And what do you foresee at the current levels for this one?
See, with the current uncertainty in the global markets, I think gold can continue. I'm not sure of the price of gold or its trajectory, but I would probably make a case that gold can actually go higher from here. Even if gold stays around these prices, Titan is a fantastic franchise. It's a great business, uh, both from the jewelry perspective and all the businesses that it is in. So overall, I think Titan is a very good long-term play. Uh, Short term, anything can happen, and that is true for any stock.
Okay, so that's as far as Titan is concerned. I'll also talk to you about the upcoming earnings season, sir, and what exactly is the big expectation there. Let's start off with the IT sector first. Of course, looking back in the last 3-4 weeks odd, IT was the biggest whipping boy. We've seen how tariff tantrum has impacted the sentiments on the IT space, despite not getting tariffed directly, but looking at what it could do in the US economy, which is its biggest playground, the impact was rather on the negative side. Earnings coming in, do you believe there could be a question mark as to how most companies could avoid giving a guidance looking at changed policies now in the US at this point in time, and what would your expectation be this quarter for IT?
I think last time we spoke, maybe a couple of weeks earlier, I sort of explained why I am not very bullish, in fact, bearish on IT.
Yes.
Multiple reasons. One, obviously, is what is happening with the tariffs. But I think bigger challenge with IT is how AI is playing out, how cost efficiencies are going to get driven, hiring is going to get reduced, and overall, I think we are in for a time when the entire IT services business model will come to a point where we need to question how these companies are going to do business going forward. So I expect a couple of years or maybe more of significant turmoil, margins going down, growth slowing off for IT. The fall-off effect actually for the Indian economy is what sort of scares me, because IT employs a very large number of people at more than median salaries. So if actually IT companies reduce hiring, that is going to impact overall consumption in the economy. It will have downstream impact. So that is something that we as a as investors or as a country we need to keep a watch out for.
Yeah.
Not only about the IT, but I think this quarter is likely to be soft. You know,
Okay, okay. And overall, where exactly would you see outperformance coming in? If we look at the broader sectors, where do you still see that the green shoots have started to emerge and things will start to look up?
if I think about the numbers, I think in some pockets of chemicals, pharma, especially CDMO,
Yeah.
some pockets of real estate, these look interesting. I think banks, some of the banks will give decent results. I think we are getting to a phase where even MFIs, maybe we are coming to the end of their, bad times for MFIs.
Okay,
So that's
okay.
something that we need to watch out for in the numbers and the commentary that management are coming out with. Uh, so I'm not expecting extremely good results from uh, any particular sector, but I think we will uh, be more or less how we did in the last quarter as well. So more or less in similar lines.
Okay, got that. I hope this has also, helped a lot of our viewers understand how does one really look at the earnings aspect there. The other big trigger for us domestically is tomorrow, the RBI policy meet. This is going to be the first one in the new fiscal year, and this is going to be the first one after the Trump tariffs have been announced as well. In the first ever policy of our new governor, we've actually seen a cut happen on the repo front after 5 years, a change in even stance as well, a lot of liquidity measures that have been brought in, something that you were just alluding to, that liquidity measures have been enhancing, and therefore we also see some aiding for MFIs and for the banking system at large. Loans could probably be doled out much faster, easily than they were earlier. At this point in time, what is it that you will be looking out for from the RBI governor tomorrow, apart from the expectation that there could be probably a rate cut of 25 basis points that most of the economists are penciling in? Do you think there is a chance of a deeper rate cut? Could that really shield the economy from the tariff impact? Is that warranted? And what do you foresee on the projections on inflation and GDP?
So I honestly don't think we will get more than 25 basis points.
Okay.
I'll be very surprised, honestly, if we do. Because, look at it from the RBI governor or, from the RBI's perspective. Why would they, go all out suddenly to cut rates when uh, uh, things are not slowing down a lot and there is so much of turmoil around us? We don't know how things will pan out, you know, a week, a month down the line. So I think they will continue with their stance. They might, in most likelihood, 25 basis points cut is what is going to come through.
Okay, so that's as far as the RBI's expectations are as far as the upcoming policy tomorrow is concerned. Let me also get a sense with you, sir, as far as the key expectation is concerned on the mid and the small caps, the broader indices at large. How are you approaching them? Of course, we have been hearing from months that large caps is your safer bet in this uncertainty. Probably this is where the portfolio should be skewed towards. But in case the retail investors' portfolios are still heavy on mid and small caps, what's the strategy they adopt?
Yeah, I've always maintained that there is no benefit of large caps over mid caps or small caps or whatever. Ultimately, when you are investing, you have to be investing looking at the quality of companies, and there's no evidence that large caps are better quality than a good quality mid cap and so on. So, and even in the fall that you've seen, right, it's not that large caps have held up, any better than mid caps. So this entire fallacy that we should be in large caps only, I think, is not warranted. What is important is to be invested in invested in good quality companies, companies where the management is good, where there is earnings visibility over the next 1, 2, 3 years. Uh, where the company is doing something interesting, innovative, where there's growth. That those are the things that are more important as opposed to the overall market cap of a company.
Okay, fair point. Understood that as well. Let's also get you to talk about some of the other spaces. The consumption theme that you began by talking about is something that I wanted to extrapolate a little bit. We are in that month where finally the tax cuts, the bonanza that was announced in the budget will finally start to trickle in. People will get that money in the hands. Now, do you think this money will go largely towards discretionary or staples will benefit? And how should one really play this theme of consumption? What's the ideal mix to really go for?
So let's look at who is going to benefit out of this, right? Uh, People who are today paying taxes, and the biggest beneficiaries are people who are who were paying taxes and but are paying taxes whose income is less than 12 lakhs roughly, right? Now, if roughly I say that's a cohort between 7 lakhs to 12 lakhs, right? That is the income range we are talking about. uh, they are already probably consuming the staples, etc., that they wish to. So any incremental money that they get is not going to go into buying more rice or more dal or more toothpaste or more soaps. Also, I think there is a change in the consumption pattern of the country. If I look around me, the young or even all across me, I see people uh, buying more mobile phones. I see people buying better quality clothes, etc. So all of that which we club as discretionary spending. So I think that is one big thing. The other, I think, is adding to the reduction in rates is uh, real estate, right? So
Yeah.
if somebody gets a significant amount of savings, then it sort of gives them a trigger to go maybe and buy a flat or small piece of land or whatever to sort of buy and construct a house, because rates are going, are becoming more affordable. They're getting incremental income, so that could also be another area where people benefit.
Fair point. So those are the key areas where, in fact, consumption theme can actually be looked at. In case you're betting big on that, look at these key 2 or 3 sectors to probably identify the right stocks from here. Would you be sharing any names, sir, from these baskets that you also are keeping an eye out on?
Let's keep names aside right now. I think time to be cautious, time to look at sort of understanding how things are going, and uh, we can come back later and discuss these themes in more detail.
Sure. Before I let you go, Mr. Basumallick, you've joined us for the first time in the new fiscal year. Do tell us what's your expectation on the markets for this new year, and where do you think investors will be better off by putting in their fresh funds so that by the end of the year they actually get to probably beat the index with returns?
See, I think I'm actually fairly positive on a 1 year time frame. I
Okay.
think all this, tantrum, etc., is going to die down within a quarter,
Okay.
because people cannot continuously be jumping up and down based on tweets made by the U.S. president or China or somebody here and there continuously, right? So all this news flow, etc., is going to die down within next 2 3 months, and then businesses, investors, etc., are going to go back to their routines, trying to figure out what is the best way of going forward. So probably, I think by the end of the year, we should be higher than where we are today. Uh, like I said, it's probably going to be better to look at themes where which are domestic driven, so manufacturing, domestic pharma, hospitals, etc. Where you have a visibility of some amount of growth, real estate, I think banking, financials. So all the things that we've talked about, these are areas, again, maybe defense, uh, infrastructure, I think I did mention. So these are areas where I think we should be, doing well over the next 12 months.
Okay, fair point. Well, thank you so much, Mr. Basumallick, then for being with us and sharing all those wonderful insights with all our viewers. Next time when you join us, we will be speaking a little bit more about your PMS as well. And congratulations to you on that one too. Many thanks for being with us on this special edition. 22,550 and thereabouts is where we are at. Much better off than what we had seen for the markets yesterday. The big question is, will this continue to sustain on the upside, or is this only going to be a bounce where some people could get tracked? Those are the questions that remain to be answered, but things are actually looking much better off than yesterday. Things getting digested on the tariff front, and as Mr. Basumallick also did point out, that over a year's time frame he is quite positive on the markets, and this tariff news could get fully digested in about a quarter. Until then, some volatility is something that could happen, and therefore it needs to be a little cautious approach at this point in time on the markets. But in the long run, all things could actually be hunky-dory is what we are expecting. We end just a day after that market rout, higher by 1.7% on the Nifty, with all the stocks on the Nifty barring one into the green. Financial Services, Shree Rama Finance, Bharat Electronics, Cipla and Titan as among those top movers on the Nifty. On the lower end, you only have Power Grid Corporation in the weaker side. Rest of them are actually up and about. All the sectors managed to end in the green, with media stocks up by 5% on the index level. PSU banks about 3% higher. Consumer durables, realty as the other sectors that were driving the show. In fact, all the sectors end higher than 1% in today's trading action. India VIX down 10% now at 20.3. BSE, Hudco, HPCL, PB Fintech as among those stocks that were top movers on the F&O space. On the lower end, Delivery, Vodafone Idea, Indraprastha Gas, Syngene, these were the stocks that dragged a bit in trade. But 22,547, that's the closing print for you. We'll leave you at that, but do stay tuned, as up next we'll be talking about what to expect from the big RBI policy meet tomorrow, the first one of the new fiscal year, and of course the first one after Donald Trump's tariff talk. Stay tuned. Nobel laureate Professor Muhammad Yunus, interim advisor to Bangladesh government, sought a one-on-one meeting with Prime Minister Narendra Modi on the sidelines of the recent BIMSTEC summit in Bangkok.